Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Jordan, let's start off with the precious metals then that have rebounded over the last couple weeks, or at least week, and a lot of that was spurred by the Fed statement. But again, gold was bouncing, the markets were bouncing, really everything was bouncing before that Fed meeting. I have to ask you though, because we have seen a bounce. Gold came down right about to that 1675 level, a little above that. Bounced from there. GDX, GDXJ, those have also bounced. Silver, that was under $20, bounced a little above $20, is now back just below $20. Are you encouraged at all by the rebound that we have seen, the bounce that we've seen in the precious metals and the underlying stocks?
To be honest, I mean, not really, just because it's too early to say. I mean, it could be a bottom, but there's not enough. There's just conflicting evidence all over the place. So, I mean, I'm not that encouraged, to be honest. But there's still a lot happening in the macro world. You know, technically, there's some good and bad. Same thing with sentiment. And so I think it's, I mean, for me, of course, nothing is ever certain. But looking at the probabilities, they're kind of mixed in my view. And so I think, you know, what happens over the next month and 6 weeks is going to be really important. If the economic data gets a lot worse and, you know, we see the bond market really rally. I mean, it's selling off a little bit here, but if we see it continue to rally aggressively in the next 6 weeks and the economic data gets worse, I think in that scenario, then even if the Fed's able to hike in September, that would probably be its last hike. And so in that scenario, fundamentally, it's hard to see how the market would be able to drive precious metals to a new low. However, if bonds stabilize and they don't rally that much and the data is kind of okay on either side over the coming weeks, then, you know, maybe the Fed is able to hike in September, and then they say, oh yeah, we're going to hike in, you know, November, and, you know, maybe in December. And I mean, even in that scenario, I mean, in that scenario, you could potentially get, you know, significant selling in precious metals, you know, driving them below the recent low. And of course, the stock market also factors in. The stock market is following the bear market template that I talked about several months ago. We're looking at the worst bear markets, the market rallies, and then an average of 7 to 7.5 months into it, it peaks at the 200-day moving average. It's following that average template really, really closely. So we're going to know in the next month or two if the market is following some other possibility or if it's continuing to follow this template. If the stock market doesn't roll over in the next 6 weeks, you know, that's also going to allow the Fed to keep up this quote unquote tight policy. So that's also a factor for precious metals. So that's why I think the probability is mixed here, because we're assessing all these different factors and when we're not quite sure how it's going to turn out over the next 2 months. But I do think that eventually in the next 2 or 3 months, we are going to see the Fed have to stop and eventually have to cut. And so looking out over the next 6 to 12 months, I think that's a real positive for precious metals. But it's a little murky here how we're going to, you know, how we're going to get to a new big rebound.
Yeah, Jordan, I think a lot of investors in the general markets and the commodities, really anywhere, not just the precious metals, across the board, cryptos already are looking towards 2023 and already have the view that things will have already wrapped up by the end of the year, regardless of whether they hike in September, November, and December, or just do 1 or 2 more hikes. Everybody kind of picked up the language that things will be moderating and kind of slowing down in the hiking cycle. Now, you've made the point a lot of times, and I think we discussed this a little bit last week, that ultimately there needs to be a divergence between the precious metals sector and the general stock markets. Is your view still that the general stock markets could still roll down and make new lows, maybe test the recent low, but then even go lower, and that would be the point where these things would diverge? Or wouldn't that, based on the way things have been trading, just continue to pull down the precious metals right along with everything?
Well, it's a really good question. And I think I mean, in the scenario that the stock market, say it rallies up to the 200-day moving average, maybe it goes a little bit above. I mean, it's trapping a lot of people potentially, and then it rolls over. In the scenario where it rolls over, maybe initially you don't see a divergence because maybe initially the Fed initially they don't reveal that they're going to shift policy, but once the market after it rolls over and once it kind of gets close to the lows, then you also have to look at the bond market, because if the stock market rolls over, it's getting close to the lows, and then we just see the inversions deepen. The 10-year yield has or it's declining to the low twos. I mean, in that scenario, the Fed is definitely done, and the market is going to start pricing in, or will have to start pricing in cuts even sooner. So you look at those factors, I think that's potentially the point where you could start to see things diverge, where it looks like the stock market is threatening to break to a new low, and the bond market is screaming that the Fed has to cut rates basically, even though they're going to have to do it eventually. In that scenario, I could see precious metals, the gold price especially, start to diverge from the market. So yeah, it's something that we will have to watch carefully, but that's the point where I think you could start to see a divergence. And I think a lot of people are, they just think a Fed pivot and the Fed potentially cutting rates like that's going to levitate everything all over again. And I really don't agree with that, because if they have to cut rates, that's even worse for, everything outside of precious metals, because that means you're in a full-blown recession, and it's so bad that they have to abandon trying to fight inflation for helping the economy. So yeah, sure, if when they do that, depending on where the market is, in that scenario, you could get a rally in everything. But bigger picture, outside of precious metals, it's not a bullish development if they have to cut rates, because usually it takes a couple of cuts. I mean, it takes some time before the end of the bear market when they actually start cutting rates. So I think that's another reason why cutting rates is super bullish for precious metals in relative terms, because number one, you're not going to see an end to the bear market when they start cutting rates. And number two, when they start cutting rates, that you're in a full-blown recession and bear market. And so that's not good for pretty much everything outside of gold and precious metals. So that's really, to me, when we could see the divergence. And we absolutely have to see that to have a real bull market in gold and precious metals. I mean, if they just keep following the stock market, then yeah, you get a really good rally for 6 months, when the Fed shifts policy and they have to cut rates. You are definitely going to get some kind of a rally in gold and precious metals. But if they're just following the stock market, there's no bull market to be had in precious metals if that happens. Yes, you could get a really good rally for 6, 7, or 8 months, but for a real bull market, you need to see gold and precious metals outperform. You need to see the stock market roll over, make a lower low. You need to see a full-blown bad recession for a real bull market. And I do think I think the odds and probabilities favor all of that happening. It's just going to take a little more time to get to that point.
Yeah, I think it's been discouraging for the precious metals bulls to see, well, the rebound, which is encouraging, but when you look underneath the surface to something like a GDX or GDXJ against S&P, there really hasn't been any outperformance from the gold stocks. Is there anything within the gold stocks or silver stocks, whether big or small, that you're seeing that gives you a little bit more confidence that investors are shifting their focus a bit more to maybe the better run companies, maybe the ones that have sold off? Any encouragement that you've seen in that move in the gold stocks compared to any of the other markets? Because again, they've just moved together.
Yeah, it's a really good question. Honestly, not really. I'm trying to think of something that is encouraging with this recent rally. And I mean, I could be wrong. We could be in a scenario. Well, I'm not making a hard prediction that it's going to go lower. But I mean, that scenario, because as I said earlier, like the probabilities are all mixed here. But there is a scenario where it's kind of like 2018, and maybe they do a double bottom or they base here for a while. I mean, if that were to happen over the next month or two, and we don't see a lower low, that potentially would be encouraging, especially if the stock market starts to roll over. and it's trading lower and it's threatening to retest its low. I mean, that would be really encouraging. Here or now, we've only rallied for a week or so, so I don't see anything that's that encouraging. I think bigger picture, what's encouraging to me, and I don't want to be like a sadist, but the worse things get in the economy and bond market, the better it's going to be for precious metals. So I think what's encouraging is, in that respect, looking at housing. We're clearly in a housing recession or going into one. The bond market is telling us, if we're not already in recession, we're probably going to have a full-blown one fairly soon. Just the economic data is not trending in the right direction. So I would, as a gold bug, precious metals investor, those things give me comfort, even though the stock market has rallied pretty nicely. But just those negative developments in the news, the data, and the bond market, that gives me some comfort with precious metals. But I mean, as far as the recent rally, it just hasn't gone on too long enough to really say there's some positive divergences here or there. I mean, they got extremely oversold. We've had a decent pop in gold, and let's see what happens over the next month or so. If September proves to be the last hike, or even July, if the data really falls apart here in the next 5 or 6 weeks. I mean, that to me is really what matters. It's all of that and Fed policy on top of it. That to me is going to be the driving force, more so than, looking at the charts and trying to decipher if, gold has already bottomed or if it could break lower. That to me is what we have to focus most on.
Well, Jordan, I'd agree with you. The macro drivers are what's going to drive the bus, and that is really what everybody's on pins and needles and watching for over the next few months. But a lot of people do appreciate getting your technical thoughts, Jordan. And so we had talked a little bit before recording this about the way things ended in the month of July. And I thought you had some interesting comments on that. A lot of technicians were encouraged that it was a bull hammer and that we did close above that 1780 level in July after starting the month off pretty rough. And we did go down and, as Corey mentioned, test that 1675 level. Technically, if you're counting intraday basis, for 4 times in the last year, and it held and it bounced right back up again. But you had made some comments that really that candle wasn't as impressive. So just from a technical standpoint, how did you view the way things closed up in July?
Well, I mean, I'm not saying it wasn't a good close. It was a very good close. It was nice to see gold, close well above the 1675 level. And it was a bullish hammer. But the problem with the hammer is the body is really small, and just the tail is way too large. And so when you have a bullish hammer, the best ones are when, after the market makes that hammer, the next candle is then like a strong white candle on top of it. So in a textbook situation, you get the bullish hammer, and that leads to, immediately after that, a very big rally the next candle, whether you're talking about a day, week, or month. And so we're not having that. Granted, we're only 3 days into it, but it doesn't look to me like we're going to see a strong white candle this month, and gold's going to close above 1850. Again, I could be wrong. We're only 3 days into it. After the candle was formed, because the tail was so long, gold already rallied over $100 from the low last month. So when you're looking for a real bullish hammer, it should be followed by a strong white candle. And I'm just skeptical that we're going to see that this month. Again, I could be wrong. I'm speculating. We're only 3 days into it. But those are my issues with the candle.
All right, fair enough. Something for us to watch for this month. And I know you're not alone in being skeptical in this rebound. Look, it's been a pretty drastic fall for precious metals, for everything, and a nice little relief rally here. But one thing to also consider is we are really in the middle of summer, in a bear market summer too. So a major change of direction coming in summer, who knows if that's possible. Anything is possible, but we'll watch this month to see what that follow-through candle is. Hopefully it's a good one, just for all the investors' sakes, because it would be nice to put in at least a couple positive months even, let alone just a week or two of positive action. Jordan, thank you as always for your time. Interesting hearing how you're viewing this market. Something we'll follow up on next week. I hope you have a great rest of your week. Thanks for your time, Jordan.